I'm 60. My spouse is 45. We both make $300,000, but I want to retire, and we spend $12,000 a month in expenses. Can we make it work? Hold on just a second. Market Watch column I saw, so let's read this here. Dayline October 10th, 2020. Alessandra Melito's thing. I'm stunned at, I mean, here's a lady, I think she's probably in her 20s. I'm stunned how many people are emailing Alessandra. It's weird to me, but whatever. I mean, it's... all right, I've read a few of your articles and I have a situation I can't seem to find much information when I read retirement planning guides. I'm 60, my spouse is 45. Currently, we both make over $300,000, and he is steadily moving up in his career. However, we only have about $1.5 million in savings, and we still owe $500,000 in our house. Our living expenses aren't extravagant, but we do like to travel. I would guess, taking into account all expenses, including our mortgage, to be around $12,000 a month. However, the house should be paid off in about 7 years. Health insurance would be through my husband, will cover us both. Assuming nothing changes in his career path, do you think I could retire now and we could continue with our current expenses? All right, so he's in Florida. All right, sweet. Planning in Florida, right on. So there you go. So this guy, or I assume it's got to be a guy because very few 60-year-old women marry a 45-year-old man. I imagine he's a guy too. So all right, they're both making $300,000. He's going to quit his crappy old job and just leave his husband to make the money. All right, so there's still going to be, we'll say roughly, for simplicity, an effective tax rate. We're going to say 22%. So they're going to lose 22% in taxes, and it will add another effective 5% when you factor in FICA. Let's just say they lose 30% when you factor FICA. The FICA's, the 6.2 stops at 139, I think, this year. But you still got the 1.45. We're just going to say for simplicity, they're going to lose 30% in income and FICA taxes. So 300 times 30% equals 90,000. So they're going to net 210. All right, 210 before tax. We're just going to not say he puts anything. Let's put something in his 401k too. So they're going to put max he can do is 20,000 in his 401k. So they're going to have 190 disposable income, roughly 190. They're going to pay off their mortgage in how many? 7 years? Oosh, how are they going to do that? So we're just, for simplicity, we'll say they got a present value. They got a mortgage of, we'll just say 4%. Zero, future value. We got, 7 years, 84 months. Their payment, hold on just a second. We got to make sure we got right there. Blank. All right, compute payment. So it's going to be about $6,000 a month, right? Is that right? 6,834, 6,834 times 12. Yeah, about 6,834. So it's going to cost them $6,000 a month. Yeah, ain't going to work, man. If they got 190 when all said and done, and $6,000, $6,800 a month times 12, that's $81,000 a year. So if they're only netting 190 after taxes and 401k contributions, and they're going to pay off their mortgage in 7 years. They're only going to have 100,000. They're going to have 110,000 left for consumption. So they're close, but they're not going to get 144. 12,000 a month, 12 times 12. Even this old coal of little lump of coal in my brain says that's 144,000. So that ain't gonna work, man. If you're trying to pay off that house in 7 years, nope, it ain't gonna happen. I'm just telling you right now. So they better do something. Maybe stretch out the mortgage for another 5 years. I don't know, but that's not going to be feasible for the next 7 years. Not 12,000 a month. Now, they did say, I guess they did say 12,000 a month includes the mortgage. Okay. Oh, there you go. Yeah, that doesn't make sense to me. 12,000 a month includes the mortgage, and the mortgage is $600-800. That's what they're going to have to pay this thing off in 7 years. So that means their total after mortgage cash flow is roughly, basically $5,300, $5,200. Nah, that doesn't make sense. So 12,000 a month includes the mortgage. That means they're spending $5,200 a month excluding the mortgage. And if that's true, they're fine. I mean, they got 190,000 after 401k, FICA, income tax, just on the young guy's salary. They're going to have a mortgage of if 12,000 a month includes that mortgage and it's going to be paid off in 7 years, they're fine without question. Just odd to me. Okay, but I wonder if that's true. So I mean, again, that means more than half of their discretionary income is going to pay off the mortgage. That seems fishy to me, but whatever. So they have no state income tax. So Alessandra says, congrats. Truthfully, your question is difficult to understand, such as if that 1.5 million is in your accounts or his accounts. All right, whatever. To answer your question depends on the numerous factors. I read your question as though you both earn $300,000. Now, if you each earn about the same, there's wiggle room for you to retire without worrying as much about the monthly bills. The other benefits to this equation, you've included your mortgage into your monthly expenses. Your spouse's employer offers health insurance, and you are over 59.5, which means that, okay, comparatively, say you do earn $300,000, then yes, the numbers suggest you could retire now and continue paying your current expenses. But you may want to double and triple check your current monthly expenses. All right. There are other things to consider as well. Hey, big man, don't forget paw the like button. For example, thinking about your cash flow now and for the next few decades is crucial given the age difference. All right. They must make sure they're funding both their retirements. If we are planning for their cash flow finances to age 90 or 95, we're planning for the next 50 years. No, but I mean, once the house is paid off, their expenses are $5,200 a month. That's easy, man. $5,200 a month. They're going to max Social Security. And they got at least 1.5 million as they're sitting here now. That's nothing. And then they got no mortgage. Consider tax implications. If you're drawing down retirement, they're not going to need to draw down retirement assets. All right. Let's talk about mortgage for a second. Paying off a $500,000 mortgage is quite the feat. All right. Here's okay. Strike Horse suggests asking yourselves a few other questions as well. Do you ever plan on downsizing? Would be before the 7 years are up. You asked about your time, but I'm compelled to ask you about your spouses as well. One thought: Social Security. We can't claim Social Security. Other considerations: do you have a need for life insurance or a trust? Why would you? I mean, why would you first thing say a trust? Michael Whitman says long-term care is also beneficial. Oh, for the love of me, man. That'll be more important for the remaining spouse. You can learn more about that here. Okay, I hate the insurance people just hawking insurance for sure. All right, well, that's a lot more than I would have thought in that regard, but they're going to be fine. All right, I mean, my goodness. I have a sneaky suspicion that if they're living on $600,000 a year gross, all right, and they only got 1.5 million in their 401k, I don't think they're only living off $5,200 a month. I don't think so. Because remember, this person said they're living off $12,000 a month, which includes a mortgage to have that sucker paid off within 7 years, which is $6,800 a month. They're not just living off. I'm telling you right now, they're not living off $5,200 a month. They're spending a hell of a lot more. So they need to get their expenses in check. This is another humble brag, if you ask me. All right, we'll see you.